So good afternoon. I'm going to be doing a webcast. Some of the things we're going to cover today are some of the most common questions that I've been getting asked here over the past week or so. Surprisingly enough, I'm getting a lot of phone calls that are kind of condolences phone calls, like, oh, I'm really sorry for you or something like that. You don't need to be. Quite frankly, this is something that we've seen is coming for a while, and we're prepared for it, and we're actually in a good place. So some of the best conversations I've had have been with people telling me, hey, you told us this was coming, and so now what? So we're going to talk a little bit today about some of the economics around this. We're going to talk a little bit about the COVID-19, the virus, kind of where we are in that stage. We're going to talk a little bit about the measures that have been taken by the administration and the things that they're doing and the effect that that has on you, your retirement accounts, and what's going on with you. So I'm going to do a screen share. A couple things to note that we've been doing actually in our office to be prepared for the meetings or virtual or having people that are kind of sequestered in their homes. And if you can hear noise behind us, I had someone ask me yesterday, what's more difficult, dealing with the road construction in front of our office? So if you haven't been here, they do have Fifth Avenue shut down, and they are currently working right outside my window to put in new sewage and gas lines. So we've got that going on also. A couple things to think about. As we are doing reviews and we're doing meetings with clients, there are a number of different ways we can do them. We have been doing face-to-face meetings and reviews up to this point. As we move forward, we're going to kind of limit that down a little bit. We're going to be able to do phone reviews, FaceTime, we can do Skype, but we can also do Zoom meetings, which is what you guys are logged into today. The Zoom features are actually very easy to use, and it makes it so that I can share a screen with you, which I'm about to do right now. So what you should be seeing is kind of the screen we're going to be looking at and talking about is how do we stay level-headed and protect our money, health, and family through uncertain times while without losing sleep and sanity. So one of the things that I think about right now is what is going on. There's a lot of information that's out there, but there's a couple different things that I'll make a recommendation to right off the bat. Number one is to pray. I think it's a good idea. Pray for those who have been affected by this virus. Pray for the businesses that will struggle a little bit in the short term. Pray for the leadership that we have at state, local, and even the national level, that they can make good decisions and get us where we need to be sooner rather than later. So I use the acronym PRAY. The first thing I think you need to do is prune where you get your information from. So I have, I understand there's a lot of information coming in. You have to consider the sources, number one. So those of you that are on the webinar today, good, I'm gonna give you some fact-based information. One of the places you should not be looking for information is Facebook. There's so much misinformation out there. It's also very important to know that if you're doing Google searches, right now is not only when there's a ton of questions about COVID-19, there's also a ton of scammers that are out there trying to hack in and get your information. So be careful on the links that you click on. If you get a link that says, hey, you can get free money because of the COVID, just click here. You might not want to click there. So consider the sources on where you're getting your information from. The second thing I would say is read. Read. Where do you get wisdom from? Read, not on Facebook, but read what doctors are saying. Watch for some of the news updates. I think Brett Baer is a good source of information. It's not too political. CNBC is a bunch of talking heads. The reality is, watch your local stations, watch the updates from the CDC and things like that. If you're going to read from a site, read from the CDC website. The next is PRAY. So the A would be action. What are the actions that we're taking? What are actions you should take? What are actions that you shouldn't take? And we'll talk a little bit about that. And the Y, I just call that yo-yo. You know, think for a second, make sure that you still are able to have some fun in the midst of everything that's going on. Enjoy the people around you, and think about the things that you should be grateful for. So a couple of the measures that we're taking here in our office, not only are we doing Zoom meetings, and we're going to be keeping you updated. I'm going to try to do these Zoom webinars weekly because things are moving very quickly and there's a lot of changes that are happening. So this is going to be a very good way for me to get a lot of information out to all of our clients in a very timely fashion. If anyone has questions upon what you hear, also during this meeting, this Zoom meeting, there should be a place where you can click and type in any questions that you might have. I'm going to pull the questions section over and have it so that I can answer any questions you might have throughout what I go through. I will also answer some questions that have been emailed to me and some of the questions that I've been getting asked. As far as what goes on, we do have a tax office. People are dropping off their taxes. As of this morning, the IRS has changed the filing date for filing your taxes to July 15th. So those folks that maybe don't want to go out and get their taxes done right now, or have tax meetings, or you don't have to, you can wait. You have until July 15th to file your taxes and to pay any taxes that are owed. And upon that, there will be no interest or penalties assessed on that. So that's very important information to know. We have continued to run tax meetings here at the office. One of the things that we've done is we have disinfected the office after every single meeting. So anytime somebody has come in, whether it's the mailman, whether it's a UPS guy, or someone coming to do taxes, I think we've gone through 2 or 3 bottles of Lysol. We've just sprayed down door handles, seats, countertops, and everything after every meeting. So some of the things that we've talked about to our clients, just some common sense things. Don't shake hands. I was saying use fist bumps or elbow bumps or something like that. An easy wave as of right now would be good. We had someone that was coming in last week and they called ahead and said, now, Chad's a hugger. Let's make sure he's not hugging me. I'm not hugging any clients right at this moment, but use when you open doors, or you can use a handkerchief, use a napkin, something like that. If you do go out in public, have some hand sanitizer in your car, have it at your house when you walk into the house, disinfectant wipes, anything like that. Some of those are kind of hard to come by, but most people do have those. Clean your smartphones, clean your phones, clean the mouse on your computer, those types of things. If you don't have hand sanitizer, here's the old-fashioned way of doing it. Wash your hands. Use soap. It works. And if possible, sneeze into a disposable tissue. I had somebody that actually asked me the other day, they said, and I'll give you a poll question. We're going to have a little bit of fun, and I'm going to try to do this with you guys. I'm going to launch a poll. You'll have the ability to pick your answer. The first question I'm asking is, are you actually out of toilet paper? So take a moment, click whether it's a yes or a no, and we'll take that way I'll know if you are. Let me know. We might have an extra roll or 2 around the office to get those to you. I had somebody that asked me the other day, said, why is there such a pandemic, or why is there such a need for toilet paper? Why is every place out of toilet paper? And I said, well, that's because every time somebody sneezes, someone else is crapping themselves. So just a little bit to let you know where we're at with that. Looks like I have nobody that's out of toilet paper, so that's good news. All right, so we're going to go through a little presentation today. Obviously, if you have any questions, let me know, and then we'll get those answers. So the first things first, one of the things that I tell people all the time is that you have to, if you can keep your head when everybody else around you is losing yours, this is going to be a good place to be. You know, cool heads, calm thinking, think through in a clear and sound manner. The reality is I got started in this business right before the crash of 08, 09. It's not something that we're surprised about. We're actually prepared. I use the example, we had a friend of mine that's a pilot, and we were talking about all of the different simulations that he had to go through when he was becoming a pilot. He said, you know, they would in the cockpit, they would have different emergencies that would happen, and you would have to deal with the emergency and whatever it was. The reality is on this, for the past couple of years, I've said we are expecting a pullback. I don't know what's going to cause it. We had no way of knowing the particulars or the specifics, but we have been kind of setting up and planning for that. So the majority of our clients are positioned in that moderate, that conservative type of portfolio. Some of our younger clients are more aggressive, but that's because they have such long time horizons. The truth of the matter is that this isn't a big surprise. The details of it is a surprise, but having a pullback actually isn't. So you shouldn't be concerned because, quite frankly, you're prepared for this. So what is the biggest problem right now? The biggest problem right now is people are losing their heads. They're losing their minds. There are some people that will have the response that they will go into straight panic, straight out panic. Some people are just wired that way. Some people will poo-poo the idea and say, it's not that big a deal. It's really all about your perspective and keeping a level head in the midst of all the things that are going on, because right now what we don't want is to have fear-based, short-term, costly knee-jerk reactions or panic reactions. And quite frankly, right now, what is the hammer? The hammer is the media onslaught. We've got health fears, and quite frankly, we've got tunnel vision. So I often will talk about this in seminars or workshops that I do, but what is the number one goal of the media? Well, the reality, their number one goal is ratings. So I will talk about, limiting the resource or limiting the input that you get. Quite frankly, when it comes to ratings, in this time or this atmosphere, the reality is that people are actually most motivated by fear to watch TV. And these companies know that. The higher their ratings are, the more money they make in advertising. So they're going to find whoever screams the loudest and whoever has the most extreme views and put them front and center, because that's what's going to sell. We think a little bit about some of the headlines that we've seen. Corona, COVID-19, pandemic, outbreak, stocks tumble, Corona, we got guys in masks, the outbreak, the reality. There's a lot of information here, but here's one of the things that we do think about a little bit. One is that the coronavirus, Ebola, was 15 times more fatal than the coronavirus, but equally as contagious. I've got some stats on this I want to kind of share with you. Back in 2002, we had SARS. In 2008, we had the bird flu. 2009, we had the swine flu. 2012 was MERS. 2014 was Ebola. 2016 was Zika. Now, let me share why now is a better time maybe than most. Let's think about the stock market has rallied. Actually, I'll talk about that in a second. Let's talk about media mentions of SARS, which was equally as contagious and more deadly than the coronavirus. There were 66 mentions of it in the news. As of right now, Corona has been mentioned, and this slide I had prepared for on Monday. It's actually now 2.1 billion according to Google News hits, 31 more times more media mentions. It's really kind of hard to keep a level head when you've got this kind of fear or panic that's happening right now. So one of the things that we want to think about is, this is Washington Times, inducing panic, media under fire for driving coronavirus hype to epidemic levels. Also, keep in mind, this is an election year. Let's talk a little bit about some coronavirus facts. Now, if you think about an outbreak will follow a bell curve. You've probably been hearing a little bit about this on the news, the bell curve and the flattening of bell curves. Well, if you think about it, whenever you have an outbreak, you will have a bell curve that happens. So here in the, let me use this. Here, we have cases without protective measures, and you'll see the height, the daily number of cases is quite high. Then protective measures, when they talk about flattening the bell curve, that is the dotted line there is actually our healthcare system capacity. So one of the things that we're doing right now is sequestering and social distancing and all these key catchphrases that you're hearing and buzzwords. The idea behind this is it's going to stretch out the virus a little bit or the number of outbreaks, but we want to hold it down because right now our hospitals, quite frankly, are full with people that have the flu. So if we do what is going on in Italy and we have more people going into the hospital, they're trying to keep the numbers down so that we can actually accommodate or take care of those folks. So that's part of the measure here. Next piece that I look at is here was the Chinese bell curve, started in January 23rd. And as of February 22nd, I think out here, this was about the 28th, there were 8 new cases in China. So that is your bell curve. Now, if you think about after that, the yellow represents our new cases around the world. So the question mark becomes for us, at what point are we going to see the bell curve and start down the other side in regards to this pandemic? So how contagious is the coronavirus? The average number of people infected by an individual with the following. So measles was about 10 times more contagious. Smallpox, polio, mumps, HIV, SARS. The COVID-19 is between 1.4 and 2.5. That's new cases. I think what we will continue to see as we move forward is more and more cases will be showing up. Some of the estimates on the disease mortality rates, you'll notice that Ebola, people infected by Ebola likely to die was about 39.5%, yet less than 100 mentions in the media only 3 or 4 years ago, 5 years ago. And now this maybe 3 numbers are still out on this. So they've ranged from 1.7 to 3.9 actually with the most up-to-date numbers. So we continue to get information, but this is one of the things that I just love. If you want to just really panic, why Americans should be concerned, U.S. might mirror Italy's coronavirus experience. Here's a head, 1 step from collapse. Oh my God, really? Seriously? Sickening. So let's kind of play that theory out. If the U.S. coronavirus mirrors Italy, people globally infected 4 out of 10,000. So global mortality, call it 3.9. We would have 5,148 people pass from it. Italy's rate at 7.3 is 9,636. Influenza, 55,672. Alzheimer's, cancer, 600,000. Heart disease, 640. So and I don't mistake me, I'm not trying to downplay the epidemic that we're in and the seriousness of it, but we're more likely to see people die of a heart attack out of panic about the coronavirus than we are actually dying from the coronavirus. It's 60 times more likely. So here's some of the questions that I'm asking folks. Has your lifestyle time frame changed? So what I mean by that is, yes, maybe your lifestyle is changing here in a short time, but has your time frame actually changed? We have a lot of tunnel vision that's going on right now. People are looking at day to day. Oh, what happened today? Oh, what's going on today? I mean, this was a headline, Dow falls, 6,400 points in March, Boeing crashes, Trump plan fails, and they've even got a bear on there. I mean, here's my question. What is our time frame? Here, Stock Market Live Thursday, Dow tanks 2,300 in worst day since Black Monday. All right, I'm going to launch a poll for you. We did one already. We're going to do another one. Here comes the poll. I'm going to give you just a minute to answer. What exactly is our time frame for retirement? Is it 1 day? Is it a week? Is it a month? Is it a year? Or is it 10 years plus? I don't have any clients right now that I'm planning for a 1 day. What is the market going to do? So thank you for the answers that I'm getting here. I don't have anybody clicking less than 10 years. Yet there's where the headlines is. Oh, 1 day. I got somebody looking at 1 day. And that's part of our problem. Part of the problem is that people are looking at what is the day-to-day. The reality is we're prepared. We've got a plan in place. Let's take a look, kind of go back a little bit. If you invested $1 million 5 years ago, how much would you have right now? So this is after our crash as of the 18th. So I'm not going to count yesterday and today when markets are up. If you invested 5 years ago and we go back to 2015, you would have $1,260,000. Now, when I look at that, that's after the crash. That's an average return of 4.74% in the Dow. If I go to the S&P, it's the same 4.64. And that actually is even after we've had a downturn. So one of the things that I have to kind of remind you of, this is, and I'm talking, this is for a portion of your investment portfolio, and that's the growth assets. That's if you are 100% in stock. Now, what happens? Did you stay invested after the 2008 market crash? I don't know. Some of you I wasn't working with at that time, but let's take a look at what if you invested in the stock market and you invested right here on March 16th of 2007, right before the market crashed. If you sold out, you were at $563,000 is what you would have had. If you stayed put after the crash, as of right now, you would have $2,185,000, which is a return of 6.2% annually average return. The entire, I gotta love these headlines. The entire Trump stock market rally is nearly gone. Oh my gosh, what a great headline. You know, imagine if the virus would have hit without a rally, when the market was not at record highs. What if it would have hit in 2010? I would argue that right now is a great time for the market to have went down. You know, if you stop and think about it for a second, one of the things that kind of jumps out at me is in February, after the stock market, let me end that polling there real quick and close that out. After the stock market rallied to its highest point ever in February, it has fallen. The S&P, for example, is down 3386 from its record high 3386 to just over 2400. It continues to change as we speak as the markets are going up and down. So how much of the fall is actually fear and panic, with the media really barraging people into this panic thinking? So one of the things that I kind of look at is, I'm going to look at a little bit glass half full. I'm glad that this pandemic did not happen right in here, because we can't control when a virus happens. So I'm happy that it happened when markets were at all-time highs. Make sense? Short term though, you got fear-based, short-term, really costly mistakes that are happening. And as I mentioned before, it's really the media, health fears, tunnel vision that's controlling us. I mean, look at some of these. When emotions take over, here's the warehouse for the toilet paper. Oh my gosh, toilet paper gone. I mean, next thing you know, we're going to see pets coming through the streets looking like this. Now that's funny. I don't care who you are. That's funny right there. Americans say they won't drink Corona beer because of coronavirus. You cannot contract the coronavirus from Corona beer. Let's just be reasonable about this. Although Heineken is very afraid of Corona right now. Coronavirus scare makes people buy out toilet paper. That's Californians. In Texans, they're buying ammo because they're coming after your toilet paper. So bottom line for us is we're not concerned because we are prepared. You shouldn't be concerned because we have you prepared. One of the things that I'm going to kind of go back to, and let me end this and put it back on here. One of the things I'm going to talk a little bit about right now is, where are we positioned? Most of our clients who are in retirement or very close to retirement, we have you positioned anywhere from defensive to moderate portfolios. If you are 5 to 10 years from retirement, then we can be a bit more aggressive, yet we've probably still got you in more of a moderate type of portfolio. One of the things I want you to think about is, right now the markets have pulled back somewhere around 33%, I think. In our moderate portfolios, we're down somewhere between 10, 11, 12. Our conservatives are down about 8%. So let's put things into perspective. Markets are down 33 to 35. We're down 8 to 12. It doesn't look good, but here's the reality. If we were very aggressive in the market and we're down 35, how long does it take to recover? Well, the more you lose, the longer it takes to recover. So we're participating last year in about anywhere from 50 to 60% of the upside of the market, and we're participating in about 10% or 30% of the downward flow of the market. So for every 30% loss, we're losing like 10. It's because of the positioning that we've got. Some of the questions that I've gotten here recently, actually I've had this come in a lot. Is now a good time to invest? Should I be putting money into the market right now? Here's the short version to that. If these things were on sale 3 months ago like this, I would be saying yes. However, one of the things that is the biggest drivers of our economy is discretionary spending. So we have two things that are hitting us at the same time. Number one is that we have an enemy. It's an invisible enemy. It is a virus that is making, it's not an economic issue that has sent us down or sent us downward. It is actually a virus. Now, on top of that, we also have Russia and OPEC having an oil war. Now, typically, that could be good news. Gas prices go down. Airlines are able to buy gas cheaper. Travel becomes cheaper. But the kicker to this is we're being told don't go anywhere, don't do anything, stay at home. We're going to ride this out. So 2/3 of the U.S. economy is discretionary spending. Our economy is going to slow down. We're going to have probably negative GDP in the first and in the second quarter. However, unlike a financial issue that drives the markets down, recoveries tend to be very long. When it tends to be an occurrence like a 9/11 or a virus or something like that, the bounces tend to be very fast. So to go back to the original question, should I be investing right now? You can. I think we can go down a little bit more before we actually go up. I think we've got some more volatility ahead of us. I believe the administration, whether you like them or hate them, has done a good job of being proactive in some of the measures that they're doing, like postponing tax season, trying to put through some bills to help small businesses and Americans and corporations and all the different things that they did back in 08, 09. They just did it way too late. They're being way more proactive today. So that's a good sign. What that tells me is at some point when we cap off on this bell curve and get on the other side of it, as is the case with most things that are occurrence-based, the recoveries tend to be very quick and snap back. Now, should you be investing right now? I'm not investing anything this week. I may not be next week, but I will leg into the market or call layering into the market. So it would be kind of like if you go to the pool and you step down a step, just to let your body acclimate and see what the temperature of the pool is, and then take another step and another step. What I'm not doing right now is a cannonball off the high dive into the water. I think we've got some volatility left. For those folks who are younger investors with us, continue your 401k contributions. You're going to be buying in while markets are low, and we have a longer time horizon. For those of you who are already retired, we have backed down. So if we have additional cash and we're going to put it in, I would look at doing it over a 6-week or even an 8-week period. So if you had $800,000 and you wanted to put it in the market, I would be looking at doing that over probably a 6 to 8 week period, and not this week, and maybe not next. But if that is a conversation you want to have, I'm happy to have that conversation with you. Just give me a call. Any accounts, we do have some clients that have brought money over. We've brought them over from other 401k retirement plans. We've put them into cash. Why? Because we're legging them into the market over the next 6 to 8 weeks. The folks that we have in the conservative and moderate portfolios, we're positioned in the right way. When we think back to 08 and 09, the Dow hit its low in March of 09. I think it was at like 64.41 or something. By November, it was up 70%. Our conservative, our moderate, our defensive portfolios were all back to all back to even and up by the end of the year at that time. So a 9-month recovery. That was a slower recovery. I think we're going to have a very quick recovery here. Main thing is don't panic. Be smart in your decisions. If you want to meet or have a conversation with me, I'm happy to do that. If you have questions, and let me see, I do have a couple questions. Is now a good time to put money in the stock market? So we just covered that. And somebody told me I do have toilet paper if anybody needs some. So that's beautiful. I do love that. I love that you've got toilet paper, Carol. Very nice. So main thing is don't panic. Keep a level head. Limit your information. Do not be clicking on links for free money. This is opportunity whenever things are kind of in panic or crisis mode. People tend to listen to the loudest voice. You do not need to listen to the loudest voice. Prune your sources. We're going to be over communicating during this time. You should be getting emails from us every week, sometimes twice a week, giving you updates and statuses. If anything changes in our planning or what we see, we're going to make you aware of it. Don't hesitate to call if you do have questions. And we do have the ability to do Zoom meetings. Obviously, I can share screens. I can do all of these different things that are high tech. One of the nice things here that we're looking at is the fact that I've learned how to use Zoom in a very short period of time. So with that, if anybody else has any questions, you can type them in. And if I don't see any, then I will talk to you again next week. We will be making this webinar available as soon as the link is ready. So we're going to be, this has been recorded. I'm going to be posting it. We will send out links to all of our clients. This webinar obviously is being done on March 20th. I am given the date on this just because of how rapidly things do change. And we will be doing another webinar next week with updated information and maybe even updated strategies or planning things that we might be looking at. So let me see. Discussed, answered. I think that's it for all of our questions. Are we still doing, another question just came in, are we still doing live meetings? We do have some meetings that might require people to come in. We're taking all the necessary steps to keep our office clean and disinfected, but we are limiting those meetings. So we have some things that are very time sensitive and things that we do have to get done. But we also have the ability to do Zoom meetings if there's paperwork things that are needed. If you have your taxes ready or we've already prepared your taxes, we may continue to keep those meetings on the books. I would just encourage you that if you are showing any symptoms or signs of being sick or anything like that, let us know right away. One of the things that I heard from a doctor on the news this morning was if you are showing symptoms, then you want to reach out, call your doctor, not go to your doctor. If within 2 or 3 days, it seems to have passed, you should be fine. If it gets worse, then reach out and find out from your doctor what the next steps or procedures would be. Self-isolate, use common sense. Common sense itself sometimes isn't all that common. So I understand that. I understand that's the reality, but I'm working with smart people and I know you guys will do all the right things. And I won't hug any of you if you do come in. So with that, if you have any questions or you need to reach out to me, I will be in the office the rest of the afternoon. Feel free to call, email, or touch base with Nicole if you want to set up a Zoom meeting for next week, or if you have questions on taxes or anything like that. With that, God bless and be safe. I will be talking to you all soon. Thanks.